All right, hey everyone, thanks so much for coming. I have a lot of material to go over, and I'm gonna go through it relatively rapidly, so I really can get everything in. Now, um, just quickly, I'm from Rightline Trading. Emails info@rightlinetraining.com. Here's our phone number, but I'll be repeating that information. Now, I'm going to start with this disclaimer that all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitor subscribers within the futures forex markets, nor for any profits or losses that may be incurred. Participating in trading in the forex and futures market does involve substantial risk. It's understood that a person can lose a substantial amount of money, therefore participation in these markets is not for everyone. Careful consideration of your financial position should be made. Prior to trading, never risk more than 2% of your account. On any trade, do your own due diligence. And those of us here at Redefine Trading are not registered financial advisors, although I'll be taking my test soon on my Series 7. And with that, I'm going to skip out my little bio here and go right to the charts. Now, the core of the system is our three-line indicator. And what it does is do a multi-time frame assessment in line 1 of momentum, in line 2 is stochastic, and line 3 of order flow, which is, of the three, the most elegant assessment. Now, I want to talk a bit about order flow, about market delta, about the volume ladder, and how we calculate whether there's buying pressure or selling pressure on the market, utilizing the market delta and all of those parameters. Now, it would be easy if market delta called the direction that the candle was going to close. You can see here that the market delta, the slide's a little bit blurry, is 29.85 and it's green. And what that means is if you look at the dome, there's more sellers on the dome than there are, buyers on the dome than sellers. We're not talking about executed trades. We're simply talking about traders sitting on the buy side or sitting on the sell side. So there's a predominance of traders sitting on the buy side of the market. Now, inside the candle is the buy-sell number or the buy-sell imbalance on a tick pip or cent level, depending upon whether you're trading stocks, futures, or forex. And they're also stacked, the assessment of stacked buyers and stacked sellers. None of this information is powerful enough to tell you how price is going to move off the right edge of your chart. And that's the only thing that makes any difference. You don't want to get stopped out on the trade. You want to make a precise assessment as to whether or not price is going to move up or down. So the market delta is green and the candle closes up. And if it was that simple, we would all be millionaires. Here's the problem. This is a positive or green 222. Now, it's occurring on a down close. Here are the stack buyers, here are the stack sellers. I've seen software that uses that to make an assessment to try to get you into a trade. It is not powerful enough. It's too transient in nature. It comes and goes, as does the buy-sell disparity at any tick, cent, or pip level. But now, when you add that all up for the candle, you have a green 222. So there's a predominance of buyers, yet the candle closed to the downside. Now that complicates things and makes the market delta assessment a little less straightforward than a lot of traders and a lot of software vendors make it out to be. Now, if we look at this, of the movement of price here, you can see that most positive market deltas are associated with up candles, and most negative market deltas are associated with down candles. But there are outliers in which you're going to get a green delta on a down candle and a red delta on an up candle. And that makes this kind of graph pretty worthless. Because even if the market delta value is getting greater and greater, it doesn't necessarily mean that what you're looking at is increased buying pressure. And let me tell you quickly the reason why. The reason why is because it doesn't tell you the aggressiveness of the buyers and the sellers. And if we look back on this candle, what this is telling you is there's more buyers on the dome than there are sellers, but sellers are more aggressive. They're willing to buy lower because they're trading with greater conviction that the market is going to fall. So even though there's a predominance of buyers sitting on the dome, these very aggressive sellers are going to take the candle down, even though they may be in a slight minority. So what we need to do is to smooth out this data and remove the outliers. And what it turns out is that 1 standard deviation's worth of market delta values work. And the outliers, which are the ones that are out in the tail of that bell-shaped curve, have to be eliminated. If we can do that, then we can make a precise analysis of whether buyers or sellers are in control of the market, whether there's buying pressure or selling pressure present in the market at any given time. The way we eliminate those outliers is we look at the delta of each candle on the 2 higher multiple charts. Now, I trade a Unirenko in the live trading room. If you can trade time or tick or Renko, it doesn't matter. The assessment's going to be made off the 2 higher time frames. And each of those higher time frames is going to create a 15-period simple moving average based on the market delta values of those higher time frames. And because you're looking back 15 candles and averaging out the overall market delta value, it kicks the outliers out. And what really moves the slope of this SMA is just that single standard deviation's worth of data. So when both of those simple moving averages are sloping up, the bulls are firmly control of the market. And they're going to get a green order flow line. And when both 15-period SMAs are sloping down, that means the bears are firmly in control of the market, and you're going to get a red line. Now, when these SMAs are not in agreement, you're going to get a yellow line. And it's as important to define when a trend is in place as it is to define when these forces are not in alignment and price is most likely to chop. And if you take a trade, you're more likely to get stopped out than get a winner. Now, here's an example. Now, order flow leads price. Now, this is simply an assessment of the 2 higher time frames. Now, I left the time frames off the trading chart because they're irrelevant, because it works on any time, on any time frame, and it works on any kind of candle. But you can see that you're moving down, and once the order flow line and both of those 15-period SMAs turn up, price on your trading chart is going to follow, and it's going to rise. And once the line turns red, price is going to fall. And it's going to turn red before price falls. Now, we have other rules that we follow to keep us out of these counter trend trades. But you can see right here, this is someone calling a top on MACD divergence, oscillator divergence, on some system when order flow is green. Now, maybe you're doing that right now when you're trading and you just don't know it, but you're almost assuredly going to be stopped out. And although with these 3 candles are moving with order flow, you're going to see that there are other rules that are going to prevent you from taking this short trade. you're going to leverage the long trade when order flow comes back into alignment to the upside. And here's another example of order flow leading price to the upside. Now, this is a directional bias, and 75% of the work is determining what direction the market's going to move. And this is going to give you an absolute direction to trade. This is significant buying pressure, and you must trade to the long side. You try to counter trend trade using any kind of other system, you're going to get stopped out. And here's what happens. Again, order flow leads. Counter trend traders we love because we go back in and run them over. And when they get stopped out, they help push price up. When order flow is yellow, we don't touch the market. And when it's red, the market's going to drop. And when it's green, the market's going to rise. Now remember, this assessment is not looking at price on your trading chart. That's what makes it an independent variable. If this analysis was using data from movement of price on your trading chart, it would become a dependent variable. It wouldn't be a predictor of where price was going. It was basing its analysis on the direction of price. We want to look at the higher time frames only and predict where price is going to move on our trading chart and leave that out of the analysis. So price is rising because this is green. It's falling because this is red. And this is a tremendously powerful directional assessment. When there's no alignment, you're going to get chop. And it's really important to define chop because that's what stops out a ton of traders. And remember, our number one goal is not to get winners. It's to avoid losers. Anybody can get winners. What separates a professional trader from a trader who's really working hard but just not being consistently profitable is the inability to avoid losers. Once order flow turns and stays, price rises. Now, we do the same thing with momentum, and it's simply based on whether or not the MACD line is accelerating away from the signal line or it's accelerating towards the signal line. And that's how we do our momentum assessment. But again, it's not done on anything off of our trading chart. It's always done on the two higher time frames. And it's a little more elegant in assessment than I'm telling you right now, only I just want to be a little bit brief so I can get through all the material. But it also takes into account this MACD crossover. But I'll show you that later. So we look at the two higher time frames. If you're trading a 2-minute, you're going to look at the 6-minute and the 18-minute. 3 times the chart speed and then 3 times the next time frame. If you're trading a 377 tick, you're going to look at the next Fibonacci. Trading a 377, the next fib is a 610, and then the next fib after that. If you're trading a 5 range, you're going to look at an 8 range and a 13 range, the next 2 Fibonacci. So you're always looking at the higher time frames. Now this shouldn't be momentum, it should be MACD. When both MACD lines are accelerating away from the signal line, you're going to get a green momentum line. And when both MACD lines are accelerating towards the signal line, you're going to get a red line. And when the momentum lines are not in agreement, you're going to get a yellow. So now you're going to combine them. And you're going to have two forces that bring powerful pressure to bear on price and are responsible for the direction that it goes. Basically, the higher time frames are governing the direction of your trading chart, and they're doing it via the use of momentum and order flow. Now, again, when you have a dual momentum order flow alignment, price may rise a little bit, But you can see that yellow halo. We'll talk about the halos in a minute. On an up candle, down it rolls. And you can see you got this down candle with a blue halo. Order flow is green, green. Next pivot, up you go. Now here, easier to define chop. You don't have green, green or red, red. Market's moving in chop. When they finally align, dual red, fall, dual green, rise, dual red, dual green. Now, also, they have the ability to keep you in a trade. If you really want to shoot for a home run and get a big runner on the trade, as long as order flow and momentum stay green, price is going to continue to rise because you have tremendous buying pressure on the market right here. And remember what momentum is. It's a second order derivation. Momentum is essentially the acceleration of price to the upside. It's like a race car going around a track. That race car is going at 100 miles an hour constantly. Momentum is constant. But when the automobile begins to move faster and accelerate, momentum starts to rise. So as long as momentum is green, price is accelerating to the upside under higher time frames. And you know you have buying pressure because the market delta moving averages based off the higher time frames are sloping up. When they're not together, chop. Now finally we add stochastic. Stochastic is the third and important force that is responsible for the movement of price. And the stochastic analysis is pretty straightforward. Again, based only off the higher time frames. Again, if you're trading a 3-minute, it's the 9-minute and the 27-minute. You always want to trade in the direction of the higher time frames and the forces that they bring to bear on your trading chart. Now, when both stochastic lines are above the 80 line, the stochastic line's always going to be green because that's significant buying pressure when the market moves to overbought and stays overbought. We don't use the stochastic to trade divergence. And I could spend a whole 45 minutes telling you why divergence doesn't really work reliably anymore. It's basically because of institutional money. And that's what these are all proxies for institutional money. Because when both stochastic lines move to oversold and stay oversold, only tremendous selling pressure can do that. And 99 out of 100% of the time, that's going to be institutional money. Now, when the stochastic line is between 20 and 80, it depends upon whether the line's above the signal line or below the signal line. If the stochastic line's above the signal line on both time frames, green. If the stochastic line is below the signal line on both time frames, red. If there's no alignment, the stochastic line is yellow. Now we have three forces to describe the movement of price on our trading chart. Now, it's a little bit cumbersome to read three lines. And the momentum assessment is a little more complicated than I made it out to be. So with all three lines in place, the assessment becomes a bit confusing. And you can leave them all up if you like, because you have momentum, stochastic, and order flow. What we do is project the results of the three-line V2, or the trend 3, directly onto the candle halo, making the assessment really simple. You don't even have to look at the three-line. All you've got to do is look at the candle halo. When it's blue, you can change the thickness and color. All three forces are aligned to the upside. Now, occasionally you're going to get a yellow candle, and it's irrelevant. All that matters is what gets you in the trade on the pivot, and you're up. Down candle, order flow has no alignment. The three line has no alignment. There's the up pivot, and up you go. Here, the candle halo is black, no trade. So you're going to trade each pivot based upon the halo of the candle body. Yellow, down. Counter trend trade, unsuccessful. We could have predicted that. Halo yellow, we go down further. Up candle on a yellow halo, kiss of death, and the trade fails. Again, just to give you one more example, there's the down halo, and it's on an up candle, warning you that price is going to roll. Now, we're having a really bad storm here in South Florida, and I hope I don't lose a connection or my electricity, because I did yesterday. But you can see the candle halo turns yellow on an up. It tells you the roll to the downside is coming. There's your entry, and down you go. Now, you can't take this long trade, and I'm going to show you why in a minute. Down, again, up candle is doomed to failure. There's order flow, stochastic momentum are aligned to the downside, and down you go. And you wonder, what are these traders doing? Counter trend trading this market. And they're trading maybe off fib support, off of some other system, again, off some divergence signal, but they are not going to make it, and they're going to get stopped out. You have to trade in the direction of the three line, because these are strong forces, all assessed off your higher time frames that move price on your trading chart. Now, to make the workspace as clean as possible, and because hold on one second, I'm sorry. I don't know why my Skype is going off here. Because all of the data you can make the three line invisible. All that matters is the candle halo. You can make your workspace as clean as possible, and you don't have to even project the three line. Now that's up to you. So I've removed the three line, and I'm just looking at the candle halo. Perfect long entry. Counter trend doomed to fail. There's the long trade, and there's your short trade with order flow, stochastic, and momentum. Now, it's your call as to whether or not you want to see the three line, but you're basically going to trade off the candle halos. Now, the candle halo is occasionally going to give you an up candle, or a blue halo, or a yellow halo, and you can, like I said, you can adjust the color and thickness to your own liking when the first line momentum is yellow. And that's because the MACD line is accelerating away from the signal line, but it hasn't crossed over yet. So it does a little more elegant assessment of MACD, and that's reflected in the candle halo. So that's the best thing to look at, even if you project the three line. Same example, and here's another example short. Three line, short. This is really not an entry. You have no entry here. See, candles haloed in black, no entry long. These are your two nice trades, short and short. Now, we also use an exponential oscillator. We've defined the absolute direction that we want to trade. Now we have to create an entry system. Now, the reason we use an exponential oscillator is we want it to move quickly. And what we do is we take the oscillator formula and we simply move it to the second power. So it's going to move in an exponential fashion as opposed to an arithmetic fashion. Now, an oscillator signal is not absolutely required for an entry, but a signal does decrease risk. And for those of you who come aboard, I'm going to do a master class with you to show you all. We have 3 entries, and I'm going to show you all 3 of those. Now, when we're above the 50, we only trade long. And when we're below the 50, we only trade short. So if we get an oscillator signal down above the 50, we ignore it. If we get an exponential oscillator signal long above the 50, we take it. Now, you're going to get a signal. Let me go to the next slide here. Every time the oscillator crosses above the 50 line, you get an up triangle. Every time it crosses below the 50 line, you get a down triangle. I've removed these. These are simply oversold signals that we ignore. Crosses above, you get a long. Right here, it crosses below, you get a short. So I want you to see what is generating these entry signals. So let's now go back and look. You can see the oscillator crosses above, you get a long signal, candle halo is blue, and up you go. Retracement, blue signal, up signal, candle halo is blue, up you go. Retracement, blue, up you go. Now, there's no oscillator signal here, so you have no trade. Here's your next oscillator signal. Up you go. Now, what's important to see is that the closer you are to the 50, the longer the trade is likely to move, or the further the trade is likely to move. When you trade off mean price, you're likely to get a very big trade. And as price pulls off the 50, your trades are moving further and further away from the mean, and they're likely to go a shorter period. So here's fairly tight to the 50, very long trade. Right on the 50, your best trade. And here, way off the 50, these are riskier longs. And here's the same thing short. Now here's a series of shorts that are terrific because they're all right off the 50. Short, 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 and short. You never take any counter trend signals. You just ignore them. Now, what I'm going to do is I'm going to go to the offer, which is way down here, and then I'm going to show you a live chart and answer any questions. Now, first of all, with the software, which includes everything that you see, the entry signals, the oscillator, the 3-line, everything, you also are going to get my options alert newsletter. Now, I create terrific options positions, and we just closed out one today for a 55% profit. We closed out one yesterday for a 100% profit. We're doing really well. We're leveraging every up move to scale out of our long portfolio, and I personally take every trade, and my account is up 50% so far. You're also going to get a perfect options module, and it's going to teach you how I trade options. It's very detailed and it's very good. And I trade options a little bit differently than other traders do. You're going to see how to take these positions. Now, you're also going to get a quick start guide, and it's a really nice video, and it's going to have you up and running really quickly. Although we do a white glove installation. We will completely configure the software for you and do everything you need to do to get up and running. You'll have no problem with that at all. And then I give you a checklist of all the things that you need to have in order to take a perfect short or a perfect long. You're also going to get free lifetime updates for the system. And we are always trying to make it better. And we make it better really often. I mean, we send out a lot of upgrade packages as we make the program stronger and stronger. And you're going to be really surprised at our next upgrade or update. Now, obviously, you get incredible support. I mean, when you call us, we're here 24. We're not here 24/7, but it's close. I mean, Rory's always on the phone, and Sergio, who's really pretty much a genius, has a master's in computer science, will always log onto your computer and help configure your workspace if you'd like. And remember, you can trade any time frame. You can trade futures, Forex, or stocks. It doesn't make any difference. You can trade time, tick, Renko, Unirenko. Sergio will take care of the configuration for you. Now, if you add them all up, which I didn't do, it's substantial. The options alert newsletter, which you're going to get for a year, normally costs $1,000, and I put an enormous amount of work into that. So you're going to get all my options trades. You're actually also going to get all my micro biotech trades. And I just saw somebody offer a very similar type of strategy for $1,400 for 1 year. I listened to the whole webinar, and I'm really, really an expert in picking small biotechs that are coming up, that are setting up a medicine for FDA approval. I have a whole group of professors at the University of Miami, and we sit down and do the analysis of all of these medicines that are up for FDA approval and come up with our thumbs up or thumbs down list. We're very accurate. Now, again, to some VIP support, the same things I really went over the last time. But in addition to that, what we're going to do, you get 1 year. Now, this is only for the first 10 traders. Now, the room is really packed, and these 10 are going to go quickly. You're going to get 1 year of my options alert newsletter. You're going to get 1 month in my live trading room. And you're going to get the free upgrade to Strategy Builder Automation when ready. That's going to be ready in a max of 30 days. So basically, the whole system will have an automated component to it. And that we're going to throw in as part of the add-ons for that same price, $497. But that's only for the first 10 who come aboard. Now, the offer expires on Friday, August 30th. Our number is 786-732-4656. And here's the link to the offer if you want to come aboard. It's really easy. It's rightlinetrading.com/trend3. www.rightlinetrading.com/trend3. Now, I have enough time, and what I'm going to do is going to show you a live chart. I really raced through that because I wanted to get through everything. So let me just drop some of this stuff here and bring over the chart and show it to you. Now, I haven't cherry picked it because we're going to go through different periods. And you can see right here, blue halo above the 50. Here's this crude. Here's a long trade. Enormous. Blue halo, long trade, biggie. No halo, no trade. Blue halo, long trade, small. No halo, no trade. And you're not going to get a halo on every trade. Now, I want you to see this entry. There's no halo, even though there's a signal. So you don't take the trade, and it saves you a loser. Now, there's one other thing that I didn't mention that I want to tell you really quickly. You are only going to trade, because we've added this too, and I forgot, is we're going to add background bias. This does a multi-time frame assessment of trend on the instrument you're trading. This is crude, so I'm looking at crude on a multi-time frame basis. When all three time frames, my trading chart and the two higher Unorenkos, that's a 4 and a 6 Unorenko. If it was a minute, it would be my 3, 9, and 27 are aligned to the upside. I get this green background. That's where you want to take your long trades, because that's where the probability of getting a winner is great. When you not only have order flow, stochastic, and momentum aligned to the upside, you not only have the oscillator giving you a signal, but you're trading into a multi-time frame trend in the same direction. Now, all these counter trend traders are doomed. And maybe they're you right now, but you're never going to take another trade like that again. Now, if we move over here, here's another trade. Green halo right here. I told you sometimes it would occur with the yellow momentum line. That's because the MACD is accelerating away from the signal line. There just hasn't been a MACD crossover yet. And that's why we use the candle halo. Up you go. Now, there's no signal and there's no 3-line here. Even though it's successful, can't take the trade. You're not going to get every winner, but what we try to do is prevent you from taking every loser. And here's another trade. Now, you don't quite have green background, so it's a little bit riskier, but it's a long entry. And here it's getting choppy. Here's your long entry. Now here, let me just add a few more days. Only have 2 days to load. Let me add 7 days to load. Now in about 2 minutes, I'll answer any questions that you might have. I don't know where I was, doesn't matter. And I'll show it to you on any other fund. Now, here's a short trade you can't take. I think this is what we just went over. I don't know if we even went over this. Now, here's a trade, can't take it. Order flow's aligned in the wrong direction. Just can't do it. Now, this you can take, and you'll learn why in my master class, that you can take this long, which you're all who come aboard are gonna be automatically invited to, and it will also be recorded. Why you can take that long. Now, you cannot take this trade long. You're not going to get every winner. I'm going to tell you that right now. But you can take this pivot break long because you have order flow, stochastic, and momentum. All of these, they're simply 3 configurable trades. Pivot break, continuation trade, and an oscillator signal trade. It's really very simple. See here, no trade. Here, break of the pivot, black halo. Here, break of the pivot, you have order flow, doesn't go very far. And maybe that's a loss. And I'm also not going to kid you around that every trade's going to be a winner. Here's your terrific pivot break. You need to break the pivot with all, and you have another great winner. Here, you break the pivot, don't have the 3-line. Now, the important thing is that you're not getting any losers. Here's your long signal, and there's your pivot break with the 3-line, and up you go. Here's your long trade, pivot break, and up you go. Now, I could do this forever, and I'm telling you, here, you just don't get a pivot break. It comes on a candle, but the candle is haloed. This is the pivot break. The candle's haloed in black. You have no trade. This candle does not break the pivot. Pivot is broken by a 2/3 candle body close above. Now, we're not going to trade anything without green or pink background. There's your long trade, and there's another winner. Long trade, there's another winner. Now, I could do this forever, but I'm telling you, your risk to reward here is incredibly good. You're trading in the multi-time frame direction of trend and order flow, stochastic, and momentum. There's your short trade. Here you don't have a short trade. Now here, your pivot break is here. That doesn't go anywhere. No pivot break. Now this is 8 o'clock in the morning. I don't know what volume is like. Here's your pivot break and your runner. Here's your pivot break. And depending on your ATM, take this whole trade. Now, you're not going to get 100% winners, but 80+% of your entries are going to be winners. Now, let me answer any questions that you might have. And while I do that, if you want to look at any other financial instruments, if I have the time, I'll be happy to do that. Here is the URL if you want to order. If I can find it. And that's our phone number. You know what? That's our old phone number. Here's our phone number: 732-4656. So let me see if there are any questions that I can answer. Let me pull them out. Okay. The YAC, it runs on NT7 and NT8. It does not run on MT4. If you have Thinkorswim, that will power this platform for you and allow you to trade off of it. And there's certain other brokerage accounts that will allow you to trade off of this platform. But it's 7 and 8 that it's operational on. So that's pretty much it. I've got an extra 2 minutes, but again, a year of the options alert, a month in the trading room, and eventually, very shortly, the system is going to be automated. It's going to have a perfect entry signal short or perfect entry signal long, and you'll have the automation available. So our number is 786-732-4656, and the offer is at rightlinetrading.com/trend3. So I really appreciate you giving me your time, and I wish you all the best, and hope all of you here make really, really good money. We're up a lot in the trading room in the last 2 days, and we're looking to hit our profit target on 2 contracts of at least $1,000 a week. So take care and have a really, really great afternoon. And thanks again for hosting me. I really appreciate it. Bye-bye.